Global dollar reserves just hit their lowest level since 1992. No breaking news alert, no panicking anchor on financial television, no market meltdown, just silence while one of the most consequential shifts in modern financial history quietly unfolds in the background. And the reason nobody's freaking out is simple. It's been happening slowly, gradually, below the noise threshold of whatever's trending this week. While everyone's been arguing about AI taking jobs or dissecting Elon Musk's latest moves, the global financial system has been rewiring itself at the foundation level. And most Americans have absolutely no idea it's happening. I'm Jimmy, and this is Finance Misfires, where we cover the structural shifts that actually move the world, not just the ones that move your timeline. Before we get into what's changing, you need to understand what's actually at stake. Because reserve currency status sounds like the kind of thing only Wall Street types care about, the ones who snack on nicotine pouches in $4,000 Soho apartments and speak entirely in acronyms. But in reality, it's the invisible engine powering the entire American economic machine. Here's how it works. When countries around the world want to buy oil, settle international trade, or service foreign debts, they need US dollars to do it. Full stop. Which means every country on Earth is constantly buying dollars and holding them in reserve, which means America has access to the cheapest capital on the planet, essentially on demand. Economists estimate the US saves more than $200 billion annually just from this structural arrangement alone, before a single American product gets sold or a single American service gets rendered. It's the greatest financial cheat code in human history. Nobody voted for it. Nobody signed a treaty establishing it. It fell into place organically after World War II, when most of Europe and Asia was rebuilding from rubble and the United States was the last major economy still fully standing. The dollar became the default. And for over 70 years, most people just assumed it always would be. But the data tells a different story. In 2000, the dollar represented 71% of global reserves. By 2010, it had slipped to 66%. Today, it sits below 58%. And every major crisis of the last 2 decades has pushed that number a little further in the same direction. This isn't noise. This is a trend. To understand why the decline of dollar dominance is such a big deal, you need to understand exactly what America loses as it happens. Economists have a term for the structural advantages the US gets from running the world's reserve currency. They call it exorbitant privilege. And it breaks down into 3 distinct pillars that most Americans have never heard explained clearly. The first pillar is intelligence. When a trade between Brazil and China settles through New York, which it does, because for decades there was no other viable option, it doesn't just move money, it moves data. The United States gets visibility into who's buying what, who's shipping where, and what's flowing between countries that have no direct connection to America whatsoever. The dollar correspondent banking system effectively gave the US a permanent bird's-eye view over the entirety of global commerce. The second pillar is investment. Because every country needs dollars to operate internationally, they can't just hold cash. They park those dollars in US Treasury bonds. Which means the world has been buying American debt continuously and consistently for over 70 years, keeping US borrowing costs dramatically lower than they would otherwise be. America gets to run deficits that would cripple any other economy because the global demand for dollar assets absorbs the issuance. The third pillar is jurisdiction. Because trades ran through New York and through US-regulated financial infrastructure, Washington could act as the supreme regulator of global finance. The 2022 freezing of $300 billion in Russian sovereign assets and the cutoff from SWIFT, the messaging network that runs international banking, was the clearest demonstration of this power anyone has ever seen. Whether that decision was right or wrong is a different conversation entirely. But the signal it sent to every central bank on Earth was unmistakable. The financial system you depend on to run your economy can be switched off at Washington's discretion if you make the wrong political move. That 2022 decision was a turning point that didn't get nearly enough attention in mainstream American financial media. Because before 2022, the weaponization of the dollar system was mostly theoretical. Countries understood the risk intellectually. But after 2022, it was real. It was demonstrated, and it was documented. Central banks that had never seriously questioned their dollar dependency suddenly started asking a question they couldn't unask. What's our backup plan if Washington decides we're next? And for the first time, they started building one. Because for decades, if you were a central bank settling a trade between two countries that had nothing to do with the United States, you had exactly one option: route the transaction through New York. Through dollar correspondent banking, through U.S. regulated infrastructure, J.P. Morgan, Citibank, the whole architecture. Not because anyone preferred it, simply because there was nothing else liquid enough, reliable enough, or globally accepted enough to use instead. That monopoly on financial infrastructure, not military power, not economic size, but pure infrastructure monopoly, is what gave America its most durable and least visible form of global control. And other countries finally decided they'd had enough of it. The response didn't come through confrontation, it came through construction, building alternatives quietly, patiently, and deliberately over years until the options actually existed. And now, they're starting to. Here's where the story moves from abstract financial theory to something concrete and operational. And this is the part that traditional financial media is almost completely ignoring because it doesn't generate clicks, the way Nvidia earnings or Trump's latest social media post does. Most people still think of BRICS as a loose collection of emerging market economies: Brazil, Russia, India, China, South Africa, an acronym that academics talk about, but that doesn't affect real life. That framing is dangerously outdated. In 2024, BRICS expanded to include Saudi Arabia, the UAE, Iran, Egypt, and several others. The bloc now collectively represents more than a quarter of the global economy and nearly half of the world's population. These aren't countries just doing business together anymore. They're countries actively building shared infrastructure designed to operate entirely outside the existing US-dominated financial architecture. And the most underreported financial story of 2026 is what they're building specifically. It's called the Unit. If you've never heard of it, you're not alone. Most people haven't, because it doesn't trend. But here's what it does. The Unit is a blockchain-based settlement instrument designed specifically for BRICS member countries. It allows transactions between member nations to bypass the US dollar entirely using a neutral unit of account backed 40% by physical gold and 60% by a basket of BRICS currencies. In plain English, it's a direct architectural attack on the dollar's role as the world's pricing reference point. Because one of the dollar's deepest and least visible forms of power isn't just that oil gets paid for in dollars, it's that oil gets priced in dollars. The dollar is the measuring stick. And as long as every commodity on Earth is quoted in it, the dollar is structurally embedded in every global transaction, whether anyone wants it there or not. The Unit is designed to break that monopoly on price discovery. In January 2026, it moved from concept to operational pilot. And behind the Unit is the infrastructure layer that makes it functional: mBridge, a blockchain-based cross-border payment platform that went live in 2024. It's the plumbing. The pipes that allow countries to trade directly with each other. No correspondent banks, no J.P. Morgan, no Citibank, no New York processing the transaction and collecting the data on both ends. For the first time in over 80 years, the infrastructure for a genuine alternative actually exists. And the infrastructure isn't the only signal worth paying attention to. Since 2022, central banks globally have been buying gold at the fastest pace in modern recorded history. In early 2023, Brazil and China signed a bilateral agreement to settle trade directly in yuan and reais, completely bypassing dollar settlement. In late 2023, India completed its first ever purchase of UAE crude oil using Indian rupees instead of US dollars. And Saudi Arabia, the anchor of the entire petrodollar system for the last 50 years. The arrangement where oil is priced and traded exclusively in USD has begun openly discussing accepting Chinese yuan for its oil sales. None of these individual moves replaces the dollar. Not BRICS, not mBridge, not the unit, not bilateral trade deals, not central bank gold buying. But that's the wrong frame entirely. That's not what's actually happening here. What's happening is optionality. And optionality is what kills monopolies. Every single time. Here's the truth about dollar dominance that nobody says directly. Nobody chose the dollar because they loved America or trusted Washington or thought the arrangement was fundamentally fair. They chose it because for 80 years, there was simply nothing else to choose. No alternative with sufficient liquidity, sufficient infrastructure, sufficient global acceptance to make switching viable. For the first time since World War II, other options are beginning to exist. Not mature options. Not options that can replace the dollar tomorrow or next year, but options that didn't exist 5 years ago. Options that are being actively built, funded, and tested by countries representing half the world's population. And here's the thing about optionality that the dollar's defenders keep underestimating. You don't need a perfect replacement to erode a monopoly. You just need good enough. You just need something else. The moment the alternative exists, the leverage that comes from having no alternative disappears. That's the actual story, and it's the one nobody's covering. This is exactly what Finance Misfires is built to cover. Not the earnings reports, not the Fed press conferences, the structural shifts underneath the ones that don't trend until they're already reshaping everything you thought was permanent. If this broke something open for you, drop a like, leave a comment with your take on where the dollar goes from here, and share this with someone who still thinks reserve currency status is a boring Wall Street topic that doesn't affect real life. Subscribe to Finance Misfires, more of the stuff that actually matters and almost nobody's talking about. I'm Jimmy. The dollar's not dead, but the monopoly is cracking. I'll see you in the next one.